Hello traders, welcome back to our channel, Bunnex Investment Group. In this video, we are going to talk about a very simple trading strategy which only calls for one setup, one session, and probably one pair. Only those three things. So we are just going to use a few indicators. These are the common indicators we usually use on this particular channel, and I've defined them over and over again. And for the sake of those who are new on this channel, we use the Traders Dynamic Index, 5 exponential moving average applied to close, which is basically 5 EMA, 13 EMA, 50 EMA, 200 EMA, and then the 800 EMA. So for this strategy specifically, we are going to respect more on the 800 EMA. Much respect is going to be put on the 800 EMA because it is the one that is going to define our market theme. So the first thing is actually to know what is the market theme. The market theme in this particular case is defined as when the market is below the 800 EMA, we will say the market theme is bearish, and when the market is above the 800 EMA, we will say the market is bullish. So basically that is the first step of defining the market theme. Is the market bearish or is the market bullish? Then after defining the market theme, we now need to define the market bias. So if you have somewhere to write, please write it down so that it will be easier for you to go back and refer everything that I'll define. So we've said we need to define the market theme and the market. After the market theme, we now need to define the market bias, the true trend of the market. And that is now seen by using the EMAs, right? So when we see a crossover of the 50 EMA crossing the 200 EMA, like in this case, it is actually a market bias being issued, right? So by market bias, when we are above the 800 EMA, we will be looking for an upward market bias whereby the 50 will be coming from below the 200 crossing to the upside. Like in this particular case, we can see this was a 50 crossing the 200 to the downside, but the market was in a bullish theme. Therefore, it was an invalid bias. But in this particular case, we can see the market now giving us an upward bias whilst the market is in a bullish theme, right? So basically, it's actually bullish theme, bullish bias is equal to a valid confirmation. After that, after determining that the market is on top of the 800 EMA and it has given us an upward crossover of the 50 200 EMA cross, the next thing is to find the one setup we have been talking about. The one setup in the London session, which is the one session. In this particular case, we are illustrating all this on pound against dollar. Therefore, you can as well adopt pound dollar as the one pair that you'll be using for this particular strategy. After that, the next thing is now to look for a W pattern. A W pattern confirmed by the TDI, right? So the TDI is basically a trader's is a trader's dynamic index which can show the market sentiment and volatility at the same time. So how do we confirm a W pattern using the TDI? We just need one leg outside the bands and the other leg inside the bands. By one leg outside the bands, in this particular case, we had an RSI line going outside the bands, and then it came back inside. But this should also be confirmed by a W pattern that you can see, a nameable pattern, a pattern that you can say this is a W pattern. In this case, we had this move outside the bands of the RSI line, move inside the bands to create the second leg. And on the charts, we can see that there was this first leg and there was this second leg. After that, the second leg we will be waiting for a candlestick reversal pattern. In this case, we had a bullish engulfing pattern that was issued. Therefore, it was a valid point of market entry. And our target usually is 50 to 80 pips depending on our patience. 50 to 80 pips, or depending on the stop loss that we have issued. If we put a stop loss of 30, we try to get double on the target side. On that note, let's have more examples. We were all in the bullish theme, but there was no crossover up until at this particular point. The market gave us a crossover whilst in a bullish theme. On that, we can see the first leg, the market pierced outside the bands and then came back inside the bands for the second leg. On these hammers, that is where we're going to make an entry, 50 to 80 pips on target, and it was going to be hit. We move again, looking for crossover in support of the market theme, right? The market theme in this particular case is bullish, and the crossover is an upward bias. Then the next is a W pattern. First leg, second leg, and first leg was outside the bands, second leg inside the bands, and the market went our way. There is a time when the market starts to chop. When the market starts to chop, we should always be careful. Chopping can be seen by the market moving up and down whilst it is on the 800 EMA. In this case, we had an upward market bias, and we had a bullish theme, but we did not get a setup within the London session, which is the session that we look to get an entry for this particular strategy, right? We went up, then it went down, and then the market started chopping. This is now chopping, and after that chopping, it's actually a time for you to exercise patience. In this case, the market was above the 800, crossover upwards, and then W pattern was issued, first leg, and then the second leg. So basically, that is what you'll be looking for. We are going to look for three things. The market theme, is it above the 800 EMA or below the 800 EMA? Then the market bias, 250 EMA cross, let them give us if the market is in an upward market bias or in a downward market bias. And then we need to see a pattern, an upward pattern or W pattern. If it's downwards, it will be basically an M pattern, and all those patterns being confirmed with the trader's dynamic index. That is, the first leg must be outside the bands and second leg inside the bands, like that, and we can get our 50 to 80 pips depending on the stop loss that we have put. On that note, we've come to the end of our today's video. I'll see you on the next one.